I am also a tax strategist, and I've been in the finance industry for over 18 years. As a solopreneur, right, or someone who's an entrepreneur. Hello, Five Family. Welcome back to the Tax Takeover, where every week we navigate through the ins and outs of taxes to help you maximize your savings through the tool of, that's right, tax planning. So today we have an important topic to discuss, and that is how to maximize your child tax credits and dependent exemptions for optimal tax savings. But before we dive in, I want to introduce myself for those who may be joining for the first time. My name is Samara Andrews. I am your resident tax strategist on the Tax Takeover and a fellow tax enthusiast dedicated to helping as many people as I can obtain wealth through the tool of tax planning, right? So here at the Tax Takeover, we know that tax planning is not just for the wealthy, but can be used to grow and protect your wealth. Right? So you can start tax planning no matter where you are on your financial journey. And I'm going to show you how to get started in today's episode. So I'm glad you're here. And please be sure to stay tuned until the end because I will be sharing a bonus tax tip. All right. So before we get into the details, let's start with the basics. Child tax credits and dependent exemptions are valuable tools that can help you have a significant amount of your taxes if you are eligible, if you have eligible dependents. And I'm sorry, they can help you save a significant amount on your taxes if you have eligible dependents, such as children. Okay. Now, these credits and exemptions work hand in hand to reduce your taxable income and ultimately lower your tax liability, right? So let's take a look at an example to understand this a little better. So I want you to imagine that you have two children under the age of 17. And for each child, you are eligible to claim a child tax credit worth $2,000. All right. Now, this credit directly reduces your tax liability dollar for dollar. That's why it's called a credit, because it lowers your liability dollar for dollar versus a deduction, which decreases your taxable income. So in this case, you would reduce your tax liability by $4,000 because remember, you have two children under the age of 17 and you get a credit worth $2,000 for each dependent. All right, y'all with me so far? All right, but that's not all, okay? You can also claim dependent exemptions for each qualifying child. In 2023, the exemption amount is $4,500 per dependent. So this means that your taxable income is further reduced by $4,500 for each child, maximizing your tax savings even more. All right, now you're excited, right? Now let's compare two different tax scenarios, okay? So, in scenario number one, or scenario A, a family with two children claims the child tax credit but doesn't fully understand the dependent exemptions. Okay. Now, in scenario B, another family with the same situation, two children, they maximize both the child tax credits and the dependent exemptions. All right. So, in scenario A, the family's tax liability is $10,000. So after claiming the child tax credits worth $4,000, their liability is reduced to $6,000, right? Remember, a credit reduces your tax liability dollar for dollar. So you see how I did that math? 10 minus 4 equals 6, right? Easy math. However, in scenario B, the family makes the most of their dependent exemptions as well, okay, with a $4,500 reduction per child. So their taxable income is further reduced. So now their tax liability drops to $1,000. That's a whopping $5,000 in savings just by understanding and maximizing their child tax credits and their dependent exemptions. All right. That's the tool of tax planning. That's the power of tax planning, y'all. Okay. So, how can we ensure that we are making the most of these valuable tax benefits? So, I want to give you some tips, all right? Number one, keep accurate records. Make sure that you have all of the necessary documents and you meet the eligibility requirements for claiming the child tax credits and these dependent exemptions, all right? That's number one, keep accurate records. Number two, understand the phase out limits. All right, now this is a tricky one because there are phase out limits based on your income level. So, depending on your income level, these tax benefits may be phased out or reduced. So, familiarize yourself with the income limits to optimize your savings. And if you connect with a pro like me, you won't have to memorize them. We do that for you, okay? And number three, consult with a tax professional, right? If you are unsure about how to navigate the complexities of the tax laws, seeking advice from a tax professional like myself can help you ensure that you don't miss out on any potential savings. All right. So that's number three, consult with a tax professional. And then number four, stay updated. Tax laws are subject to change, so you have to stay informed about the updates and the changes on these exemptions. That's another reason why I encourage you to consult with a tax professional. The tax code is vast, and you want to make sure that you are maximizing every single credit and exemption that is afforded to you. All right, so stay informed. All right, so I also have a bonus tax tip. All right, so if you are a parent who has a child in daycare, you may want to consider opening an FSA account. That's a flexible spending account with your employer. Here's why. An FSA account will allow you to use tax-free dollars to pay for items like medical bills, prescriptions, maybe co-pays to your doctors, and guess what else you can pay for? Daycare. That's right. This is a game changer for those who can relate to paying the high cost of daycare fees, right? And y'all, I personally use this strategy on my youngest daughter because I didn't know about it with my boys. I know. But I used this on my daughter and it worked tremendously. Okay. Now, there are some things to make sure that you have to consider when getting your FSA. There is a limit to the amount that you can contribute to your FSA. So just make sure that you are abiding by that limit. But definitely do not leave money on the table. This is an amazing tax tip so that you can use tax-free dollars to pay for daycare. All right. And that's it, y'all. That's a wrap on maximizing the child tax credits and dependent exemptions for optimal tax savings, right? So remember, understanding and leveraging these tax benefits can make a huge, significant difference in reducing your tax liability. So make sure to implement these strategies when filing your taxes. That's why you need to connect with the tax expert like myself, right? So if you found this video helpful, make sure you give it a thumbs up. Make sure that you are sharing it so that others may also benefit from these tax saving tips that I was able to outline for you on tonight. Okay, and don't forget to just so make sure that you subscribe to our channel. Also, make sure that you are following us on LinkedIn where we share more tax tips and informative articles, all right? It's the Tax Takeover. We're all about sharing on other platforms. And finally, if you are looking to use our services to get a jump start on your tax savings, please visit our website and book a tax strategy call, y'all. We're going to let you walk away with actionable items that you can go in and implement and start saving as soon as you hang up that phone. All right. So hopefully this was a helpful and a very informative tax takeover episode. Again, I hope that you share this, like it for sure. but please do share with someone else who you know who may have dependents and can take advantage of these tax strategies that we outlined for tonight. All right. So thank you for tuning in. Happy Tuesday to you all. And until next time, happy tax planning.